Welcome everybody to the Daily Recap Show where we talk about stocks and the financial markets. My name is Chase. If you like this video, please subscribe, hit that notification bell as well as the like button and leave a comment for the algorithm. Let's get into it. This is the daily heat map of the S&P 500 and US stocks were mixed on Monday as Wall Street looked to carry its momentum into the first trading session of November with big tech names like Amazon and Nvidia again leading the way higher. And that was the story of today, and it's been the story of the last couple of weeks or so. We've seen Nvidia carry the market and just the big tech names today, Amazon and Tesla holding it up. For the rest of the market, Google up ever so slightly, but Meta down just shy of 1%. Again, brutal price action here for Meta after being down like 12% last week. Apple down 0.8%. AVGO was down 1.3%. Infrastructure caught a bit of a bid here today, except for Oracle as well as Microsoft. And everything else was actually pretty red. Today, under the hood, breadth was actually rather poor. You can see that there were only two green sectors here today, the XLY and the XLK, so the consumer discretionary, and the technology sector. And this is really like Amazon, Tesla, right? Nvidia, Amazon, and then Amazon's also like right here. In these two sectors right here, they were the ones that were green. They helped the SPY gain 0.18% today, but every other sector was green, including gold. So today wasn't really just a risk-off day. I mean, if you just exclude this, what we really saw was mildly just a liquidation, sort of the market saying, hey, things are getting a bit frothy. We had a great October. I'm just going to take a bit of profit, pull a bit of money out of the market. And that's why we saw a lot of these names, or all these sectors, I should say, down in a very big way. And it was, through and through, mid caps, large caps, small caps, that was just selling everywhere except for large cap growth. And again, this had to do with, Tesla, Amazon, Nvidia, but selling through and through. And a lot of the selling just stemmed off, I think, number one, a bit of profit taking, but also just some very poor economic data. We don't really get much economic data with this government shutdown, but the data we do get, I think we're leaning into now. For example, the ISM manufacturing numbers came in a lot worse than expected, not good. For example, the PMIs right here came in at 48.7. The consensus was for 49.5. The ISM manufacturing employment, however, did come in above expectation ever so slightly. So that is good. We also did have a couple of Fed speakers that they came in, poured cold water on a December cut, Cook and Daly. So that didn't help price action, sentiment, or momentum. And we actually did see a lot of the rate sensitive names did take it on the chin vis-a-vis real estate. Not a good look in those sectors. And that was just on the back of these two Fed speakers coming out. However, we are getting optimism around an easing US-China trade tensions. Trump announced a China trade deal over the weekend, which outlines a whole bunch of stuff. The US to reduce its tariff rate, China to suspend its retaliatory tariffs and non-tariff measures, and a whole bunch of new general licenses, commitments with like fentanyl, buying soybeans, etc. And all in all, this is good, but the market is still trying to assess what this looks like. I think once we see these measures come into par and once we get clarity on a final deal, then the market's gonna probably get the real green light to rally, especially those sectors that are tariff impacted. But in AI news, and the reason why we actually saw AI stocks, gain today, and again, it seems like the only game in town, is because OpenAI turned to Amazon in a $38 billion cloud services deal after their restructuring. Long story short, OpenAI keeps signing deals. Amazon was up another 4% on the back of its earnings after this news. So Amazon up like 19% year to date. Really, really solid stuff. A lot of that gain coming in the last week or so. But AI was the theme today. Cypher Mining, a stock I've been saying that you guys should be buying a lot of, especially these like AI infrastructure names, was up 20% today after it signed a 15-year, $6 billion lease with Amazon, by the way, for 300 megawatts of AI capacity starting in 2026. And it formed a new JV to build a Colchis, a 1 gigawatt West Texas campus with 95% ownership. Very interesting stuff going on in this name right here. Iron also signed a $9.7 billion cloud deal with Microsoft. So what we're seeing is these massive hyperscalers, they went to CoreWeave first. Now they're branching out to these smaller AI adjacent names, probably because they can get better power efficiency. A lot of these Bitcoin miners turned into AI infrastructure names, have really great power deals. They've signed like long-term power deals for when they were Bitcoin miners. Those deals are still running today and they can get very cheap power, and power is the ultimate bottleneck that's forming right now in the market. And then on the back of all of this AI news, Nvidia was up 3.2%, despite Donald Trump saying that the most advanced Nvidia chips will only go to United States companies. They'll stay in the United States. They won't go to China. They won't go anywhere else. And then for everything we saw today, there was 2,300 advances, 3,900 decliners. We saw net outflows in the New York Stock Exchange, inflows of the Nasdaq 100, the S&P 500 gaining ever so slightly. Market momentum not looking that great. I mean, look, we're still holding these longer term averages, but we've lost the shorter term, the medium term averages. And in fact, they actually decreased from Friday into today. So essentially what this is telling you is that shorter term and even in the medium term, there's not a lot of market momentum, and that is why we're seeing a lot of volatility. So if your portfolio is seeing a lot of volatility, this is probably the reason why, unless you're probably glued to those AI names, in which case your portfolio probably is going up. It does seem like AI is the only game in town right now. Now guys, I am recording this video a little bit earlier than usual, so do forgive me for that. But what we could see right now is that the S&P 500 and the Nasdaq 100 deep in the green, especially the Nasdaq 100, but they certainly are coming off their highs. But the rest of the market, the Russell 2000, the equal weight mid caps, red, but not entirely red, not super red. It's not like a complete divergence, but we are seeing the broader market take it a little bit on the chin here. I mean, the S&P 600, profitable small caps, slightly in the green, mid caps outperforming the Russell 2000 at least, and the broader equal weighted market in the S&P 500, but still red. And at that point, you're sort of just trying to search for outperformance. It's not really in aggregate. European stocks looking good, up, or international stocks, I should say, looking pretty good. Middle Eastern stocks were up 1%, India stocks half a percentage point, China stocks pretty much flat here on the day. Crypto really taking it on the chin. Ethereum down 7.1%, Bitcoin down 3.18%, despite what is, the S&P 500 pretty much notching, we could say, an all-time high, at least a closing high here on the weekly chart. I mean, technically speaking, if the week was to close, that would be an all-time high. But if you go to the daily chart, not quite an all-time high, as you can see right there. It really depends what you value more, the weekly or the daily. I think both have their pros and cons. That being said, when we look at Bitcoin, it continues to just sort of trade in this really terrible pattern. It hasn't really traded well. Same with Ethereum. We'll talk about it a little bit later on. Now, guys, very interesting to see here. After some of those Fed speakers, we got yields were up actually quite significantly. The 10-year yield at about the 4.1% range, the 2-year yield at about the 3.6% range. And then we have the VIX index volatility down ever so slightly. So still a little bit elevated here at 17. I think we should probably see this fall to 15, maybe 14 through the end of the year, assuming seasonality does kick in for this market. The dollar was up ever so slightly, showing a bit of strength right there. That's obviously going to be the case when we see yields strengthen. Gold was flat. TLT was down on the back of yields. And then we saw silver down 0.77%. For the most part, what we are seeing is that commodities are holding their value fairly well in light of everything that we've seen. I mean, gold had a pullback, but it wasn't anything crazy. It certainly is finding support right now. But when we go ahead and look at the S&P 500, now we look at the weekly chart, right? And you can see that we clearly are in a weekly uptrend. You don't really want to fight this trend at all. When we go to the daily chart, we can see that we are starting to see a little bit of fluctuation right here. A lot of red candles, right? And the market's sort of just trying to figure out what's going to happen next. I mean, when you do look under the hood, when you do look at stuff like the RSP, right? The market not really acting super well in the equal weighted S&P 500. I mean, still trading at these highs right here, but definitely trading lower. When you look at the S&P 500, not really trading low, sort of just staying at these highs right here, these all-time highs, especially with the Nasdaq 100 as well, pretty much at its all-time high. So we are seeing a little bit of a divergence, and that's what the market is trying to figure out right now. What do we do? Where do we go next? How does the next leg transpire here in the S&P 500? Because we did have this super gap up you see here in the Nasdaq 100. We had that in the S&P 500 last week as well. And so what happens next? What is the next leg that takes us higher? Because earnings is behind us. We're sort of getting the earnings for a lot of these smaller names. We're getting like Palantir for the close today. HIMS, a lot of AI names. We got Cypher Mining today. And ultimately, the market is digesting a whole bunch of news. I think we're still trying to get final details on the tariff stuff. I think the courts are still deciding what Donald Trump is going to do with his tariffs and what are the implications of that. All in all,
there's a tiny bit of uncertainty, and once that becomes certain, that can be news that the market can rally on. Either way, if we are to get pullbacks in this market, I do think you still want to be buyers, especially in the S&P 500 and NASDAQ 100. I still think the mega caps are where you want to be. The AI spending will continue, and I do think that if we do get a pullback, right, if we do get like a significant pullback to the 6130 area, this is probably where you want to buy, looking for value into 2026. Now, if we do take a measured move from where we are to where we could go, you're looking at about a 10% move right there. So it'd be about a 10% correction, in the market. It'll feel painful if we do get that pullback, but I do think that is probably where you want to go ahead and buy with the NASDAQ 100. That is the 22,000 area. I also do think that you probably want to lean into these names. I think Cypher Mining, I mean, for example, Cypher was up 20%, nearly $25 at the highs. I think if we do get a pullback here to the $20 mark, we go ahead and buy that dip. Looking probably again for those $25 highs. I do think this stock probably goes significantly higher. IRN as well, Iris Energy. This is actually an Australian company, fun fact, guys. I think this is probably a $100 stock. I think if we get back to the $60 mark, maybe the $65 mark, you go ahead, buy the dip, farm premiums for these names, see if you can get in a good spot, and then just let the AI momentum wave ride it out. Now, probably the name I'm most bullish on is APLD. I think if you can get in the 30s for this name, I do think we go higher. I mean, the price action so just digesting a lot, and I think that's probably what we'll do for a while here. It's probably just trade sideways and then make the next move up here for APLD. That being said, a lot of these names have had a lot of momentum, so they do have to digest, but I do think the path of least resistance for a lot of these names is higher. Now, looking at Bitcoin and crypto continue to, the price action here is not very constructive if you ask me. Holding above the 103 area, as you can see right here, but yeah, just making lower lows. Dip buyers certainly coming in, as you can see with these wicks right here, and we had a massive liquidation event, the biggest liquidation event ever, and Bitcoin was only down 3%. That is positive, but yeah, the price action here not looking that great, especially with Ethereum, right, sitting right on this trend line right here. I mean, if we break this trend line and move lower, that does open up some very deep levels here in the 3,300 area, potentially even the 2,800 area. We'll see how that goes, but yeah, Ethereum not acting well. Bitcoin, acting all right, but the price action in crypto right now just not encouraging at all. I do think we go higher. Ultimately, I do think I'm still very bullish on crypto. I'm just saying that the price action is not that great. Now, let's go ahead and actually look at gold, guys. Gold is performing very, very well. We saw a bit of a pullback here. Nothing crazy. I mean, if we measure it peak to trough, about 11% pullback, right? Didn't feel like that, but it was about 11% pullback. And now we're finding support right here. Now, it's really hard to say, should gold find support right here or lower? I don't really know, because this is pretty much all new all-time highs for gold. There's virtually no support right here. So it doesn't look like the market is trying to find support right here at the 4,000 level, this psychological level. So I think gold is probably just going to do something like this before either making the next move to the upside or the downside, depending on what happens next. That being said, vicious move, a 10% move, probably much needed, but now it's time for gold to base and then make its next move higher. Now, quickly looking at yields here, guys. The 10-year yield, seeing a bit of strength. We probably will go to the 4.2% range here in the 10-year yield after some of the comments we got from those Fed speakers today. But I am expecting a little bit more strength here in the dollar. We are starting to see quite a bit of strength in the DXY. Expect a 100 DXY before the end of the year, maybe even a little bit higher than that. But all in all, guys, I still think you want to be buyers of dips here in this market. It does look like we're fading towards the end of the day if we just go on a one-day chart. Yeah, it does look like we're probably moving a bit lower into the close right here with the NASDAQ 100 as well. Moving a little bit lower into the close. We probably might finish flat here for the S&P 500 for the day. Again, the day is not completely closed. I am recording this a little bit earlier than usual, simply because I got some stuff to do today. That being said, guys, regardless of what happens today or tomorrow, the path of least resistance is higher through this year and 2026, and you want to buy the dip that has served us well this year. It served us well last year. It served us well the year before that, and it will serve us well again next year.
Guys, then diving into sentiment, this is Goldman Sachs US Equity Sentiment Indicator, which determines investor positioning and sentiment, which combines 9 measures of positioning across institutional, retail, and foreign investors, and has historically been a statistical significant signal for near-term S&P 500 returns. And what we can see in the last couple of months, or since 2025, investor positioning has been very light following the tariff tantrum. We put in a low, and we have since moved up significantly, going into slight positive positioning here in the last couple of weeks. However, this week, or I should say last week, in the last week of this indicator, we've dipped back down into negative territory. In other words, positioning versus the last 12 months is actually lighter than it was. And given the seasonal flows we can see in the market, this is actually a very solid signal that we could actually go higher because we have a chase for year-end performance, because this is what November seasonality normally looks like. We actually see returns of about 3.5% in the month of November for the S&P 500. We have a large pool of data, nearly 100 years, and yeah, we get rallies and consolidations, rallies and consolidations, rallies into the end of the month. But the path of least resistance is for us to go higher. This is backed up by earnings, mid to low teens earnings, as you can see right here. If you exclude energy, we're looking at about mid-teens earnings growth, backed by revenue, exorbitant margins, 83% of companies beating the analyst expectation. What's not to love about the equity markets right now? And any dips is simply opportunities for you to go long, because we have Q3 GDP sitting just shy of 4%. And I do know there's a lot of concerns about the consumer right now, but when we look at aggregate card spending data, both worldwide, in the US, we're looking at 7% growth in aggregate. And this is gross dollar volumes, as you can see right there, guys. 7% growth here in the United States, 9% worldwide. The consumer is simply not letting up. And this data in aggregate is telling us the consumer is holding up okay. Looking at data for the rest of the week, or I should say tomorrow, Tuesday, we don't really have a lot, but we do get the jobs openings right here. Now we're looking for about a 7.2 million figure. We'll see if we get this data. We also get the export and import data. This is actually largely important given the tariff and trade situation. We also get the balance of trade right here, and these are the figures we will be expecting from them. We also get factory orders month over month here for September and August. And it looks like we had a pretty rough September, but it looks like we had a rough September bounce back here in August. We'll see how this pans out. In terms of data tomorrow, guys, we're really in the thick of earnings season right now. We had some of these high beta names, Fubo, Cypher, Palantir, HIMS report today. Tomorrow, off the bat, Uber, Shopify, Spotify, Pfizer, right, all reporting. Ferrari, this is going to tell us how the high-end consumer is holding up. Marriott, Hertz, Wing, ETN, a Hut Group, a Bitcoin miner. Then after the close, all of these semiconductor names, AMD, SMCI, Arista Networks. This is literally a bellwether for the semiconductor trade, excluding Nvidia. That's all happening tomorrow, guys. So stay tuned for a jam-packed video tomorrow. But if you've made it up until here, thank you so much for watching. If you like the video, please subscribe, hit the notification bell, as well as the like button, and leave a comment for the algorithm. Cheers.